In this video, you're going to see a trade that I took exactly 1 week ago that made me right around $4,000 in less than 10 minutes. You're going to see the full setup, how I took it, and how much money it made me live. Then, after the video, I'm going to come back and break down the trade for you so that you can replicate this strategy. Enjoy the clip. See you in a bit. 41. Any close below 624.41. Watching close. 4, 3, 2, 1. Buying here. Filled at 149. And I'll put my stop in at 128. We can rip through this level. This could be nice. There's the reaction we thought we'd get. Now we just need to sell through that and we'll try to get positions off. So at this point, we expected that reaction and I didn't have intention to sell with a 2 penny gain. So it's a little bit different. I'm going to be trading more the contract price if we can rip through here, but I'll want to catch some speed. We got our stop in a place that'll for sure give us this line of defense here, maybe even a little higher. Actually, those contracts held pretty well.
It held really well.
Wow.
And I love the way it came and reacted to 624.54 and fell off of it.
Yep. Stops in place. Not going to touch it. Not worried about it. If we get stopped, we get stopped. We do need to rip through this level, I think. We could catch some speed then. So stops at 128. This is what I was talking about this morning, where if we can survive that initial big retracement with that 15% stop, that's where I think we're at most risk to get stopped at 10, but not at 15. So I'll leave it there. If we come back down and we start testing that 624.30, I might take some of that risk off with our stop, but we'll see. I want to give it a chance to hold. You got anywhere to be, Jerry? Jeez. Are you still here? Oh, did Jerry leave? Oh, he's frozen. Am I frozen? Can people hear me?
Yeah,
Oh, there.
I'm still here, man.
Yeah, we heard you. I mean, I just heard you say that now.
Oh, okay.
Maybe it was me.
It might be me. I'm on mobile.
Ah.
Here we go.
You didn't Magnus didn't quite get you verbatim, but I don't know if you probably didn't even see that. All right, so let's see if we can rip below this level. I will get my stop off. If we can push through it, we'll try to get some profit. The good thing about this, again, we have some evidence in most recent price action that has moved quickly, so we'll be ready for that. Unfortunately, took a little longer than I wanted, but one more push through, I'll take my stop, and then I'll look for taking my stop off, and I'll take half off here at 164. Another
There she
quarter at
goes.
177. Stop to 155.
Good job, Ryan.
If we get stopped, that's fine. There's that quick move that we
Told you it was coming. And right off the
suspected.
aftermarket low is where it bounced.
Yeah.
So no surprise there.
Stops at 155. I don't care if this is a little tight. I think
No, we're good.
we'll be all
If
right.
it can get and stay below 624.04, we'll come back down again.
Yeah. Okay. Get ready to slide your stops. I don't know how people execute it, but I'm gonna slide mine if we get another push. Stop to 160.
Nice. Here it goes. Come on. Come on.
Stop to 165. That's okay if we get, I'm fine with that here. Stop. Well, I hope you enjoyed that clip. That certainly was a fun trade for me. Now, I want to break down this trade a little bit more for you so that you can learn how to do the exact same thing yourself. Behind me, I have the entire New York session from July 15th right here. Now, if you look at this and you're not used to looking at price action, you don't really see much. Maybe you see a little bit of a downward motion, maybe a little bit of a sell-off, but what do you make of this? There really isn't much there unless you know how to apply this strategy. Now, if you recognize this particular day, I did show this example in my prior video. In this particular day, I was unable to trade in the morning, and so I hadn't even looked at the chart until right around the afternoon session, which I tend to trade between 2 p.m. and 3 p.m. Eastern, give or take. Now, when you trade in the morning, we typically look at the pre-market price action to find our range. Well, in the afternoon, we had far left pre-market low. We were finding a new range. And so the first thing I noticed, and I mentioned this in my prior video, we had a very clear low of the day, late morning right here. And so the first thing I do is I mark the swing low, which happened to be at 623.88, and then we had a swing high here. However, when I came to look at the market, it had already left this range here and come down to here. And so I happened to mark the low of the day where the bodies of these candles closed right around here. So my second level was right around 623.20. What happened after that? Price found a new range from this candle when it closed below the swing low here, found the low of the day here. Now, what's interesting about key levels in price action, and this is the foundation of the hypothesis of why this strategy works, is that key levels of support, once they're crossed over, tend to act as key levels of resistance and vice versa. And I'll show you how that works right here. So once we had this key level of support, we closed below, we found underlying support, you saw that same level of 623.88 act as resistance. Once we had a firm 5-minute candle close above that, SPY was telling us that it wanted to enter back into this range. And so you can see several different instances where 623.88 acted as support and then as resistance. Once it left that range, we also will hypothesize that same level will be used as support to push price higher. Now, I started looking at the afternoon session at this candle right here. And so what did I have to work with at that point? At that point, I had hypothesized that the range that price was going to trade in was between 623.88 and right at the swing high of 625.31. However, as current price action develops, we have the luxury of adjusting our levels based off of where the newest level of resistance is telling us it's going to form. After we had a number of candles fail to close above all of these bodies here, we moved that level of resistance down to there at about 624.76. At the same time, we were forming a really tight range and found several reactions of support right along these bodies here. And so we looked and we saw price react to support right around here. And I'm going to adjust this down slightly so that it actually captures the body of that red candle right there. And so as price developed throughout the afternoon, we were gaining more information, and as we got more and more confirmations, the more and more convicted we felt about this. And so the more touches we got as support, the more touches we got as resistance, the more convicted we felt that this was the new price range, and that if price could break out of it, it would leave that range, find it as resistance, and push down. Now here's what happened. We had 1, 2, 3, 4 touches as support, and then we had a firm 5-minute candle close below 624.53 on the 240 candle. That was our signal for an entry for puts. So we bought puts here, and our hypothesis was price would enter this new range and it would distribute down to the next area of underlying support right around here. The second piece of this strategy that I mentioned before is that if price doesn't immediately distribute down, which we want, of course, we want speed with options trading. If price comes back up, that same level of 624.53 that was support would act as resistance and push price back down into the new range. Well, in this candle, we noticed that price was running into some buying pressure at the bottom of this wick, and I'll zoom in just a little bit to show you. So right about here. So let's look and see if we can figure out what that buying pressure is coming from. Well, again, when price acts as resistance, once it leaves that range, it also tends to act as support. We noticed that these last swing highs were actually acting as buying pressure to prevent price from pushing through to this next range. However, we had this level to support us to push down, but we had to break through this level here. And so in the next candle, we found resistance again at the exact same level that we had as support. And what was really helpful about understanding price action is that when price came back down, we looked to see how did price move through this next range most recently. It was very quick. And so once price moved here, we were able to take our stop loss off and be ready to sell half our position. And as soon as price moved, as you saw in this clip, just below this level, it ripped right down. We got half our position off, and then we got a third quarter off. And in that last quarter, you notice that we executed a little bit differently. What we were trying to do is to capture that last quarter of our position as a trailing stop, recognizing that if we were able to clear this low, which we did, price moved very smoothly all the way down to the low of the day. Now, we almost were able to capture that. We may have trailed our stops a little too closely, got stopped on our fourth position, but price did in fact move all the way down to almost the low of the day here, despite getting stopped a little soon on our trailing stops. Full trade, 14% trade. I made almost exactly $4,000 in 2 candles, in 2 5-minute candles, less than 10 minutes. Took a small win a little bit later, netted just over $4,600 in one day from 1 hour of work. Anyway, if you enjoyed this video, please subscribe to my channel. Also, I'm thinking about posting more live content as I move forward. If you guys enjoyed the live content, please let me know in the comments. Third thing, if you'd like to join this group that I trade for live every single day, please click the link below in the description. Thank you very much. See you next time.